Marty, this is, I want to say, real pleasure. Like I was telling you before recording the podcast, it's an excuse to catch up with friends. And, while we're at it, might as well start recording. So obviously more, more than just a friend here. So I guess first part, we've spoken about the subject a lot, but it's a while that we don't talk every single day anymore.
Yeah.
I really want to pick your brain on product, right? So now that you're president, general manager at Gsoft, you have obviously a huge portion of your responsibility is thinking about product and the future of the product. What does it take to you, like, to build an amazing product? Or is there even like a simple recipe, or is it just too broad of a like subject to like distill into like talking points?
Yeah, it's a big question. And one thing obviously having been in service for 5 or 6 years before, I was in product almost all my career before that. And one thing I had not forgotten, but maybe to the extent of which building product is really, really hard. Um, and it's actually like there is no magical recipe. There's like best practices. There's things that you can follow guidelines, but if there was a magical recipe, everyone would be a billionaire. So it's very difficult, and it's actually kind of the premise of how I joined the business. Interestingly enough, it is so difficult, and to do it at the scale that we're at now, it was kind of the strategic, I guess, tenet or backdrop of having Simone, which is CEO, focus on bringing new product to market in the lab. That was kind of the genesis of creating my position. So, I mean, to get back to your question, it's a very, very complex thing. And it's like the answer is probably different for a bunch of organizations. Like we're very much product led. So we let the product speak to the market in terms of our go to market strategy, how we bring product to market. It's very focused on like bringing value in a very short time span, having a good like kind of 80/20 rule in terms of complexity and product value. So I think every product business has their own approach. Us, it's very iterating quickly, bringing value quickly, uh, keeping things as simple as possible. Our target market is small business to kind of mid market SMB ish. So we try to keep that in mind. Yeah, it's. I really think like every successful product company has their own kind of way of doing things. We have our own for sure. We do a lot of product management, product development, and ideation around our needs because we're kind of representative of our target market. Office Bio is a direct example of that. So is SoftStart actually. So yeah, I think it's very complex. Different answer probably for every business, but that's kind of how we look at it.
Yeah. How do you think about the voice of the customer, right? I know it varies by product and by maturity of the product, right? Like, what's the old expression of, everyone would have wanted a faster horse kind of thing. So when you're like a pure innovation, of course, maybe like doing customer surveys is not the best, but like once you get past a certain threshold, I imagine it starts counting. So you guys are interesting
Yeah,
intersection of launching new products, but also a lot of like existing mature products that are almost 10 years old now. So how do you think about the
yeah,
customer?
yeah. So we actually processize that kind of that dial between incremental data driven product decisions and kind of roadmap items and product features and just kind of pure innovation, making stuff that customers don't know they want yet. It's not something that was processized before in terms of just defining the ratio per the product maturity that we're working on. Obviously, stuff that's happening in the lab is probably 80/20, innovation, data driven ratio, and a product that's been around for, 10 plus years, like ShareGate, is maybe not the opposite. We're still pushing pretty hard on innovation, but there's so much data that it has a bigger weight in the equation. It's a much, much bigger P&L. It's like there's other things that come with that, or baggage and financial expectations that you can take less risk in proportion, but you can still invest and manage your innovation properly. I think.
Yeah, yeah, it's fascinating because you guys are like you said, you have two, I want to say like relatively mature, products, and then one newer
Right.
one with soft start. Like, what's the portion of the pie between, let's say, those three, right? Like between ShareGate, Office Vibe, I imagine they're like 98% plus of the business today, and like soft start's relatively new.
Yeah. Yeah. Financial, actually, and product metrics, it's probably the same proportion. But it's probably like, 70, 30, and well, it's probably not even a percentage point for soft start. It was launched, about 6 months, I guess, ago, or six to 8 months ago. It's still new, still iterating on kind of the core value of what it is and what it's bringing to market. But yeah, so ShareGate is, I guess the proportions fit with the historical existence of the product. So ShareGate is the oldest one. It's generating the most revenue. But interestingly enough, it's kind of following that product maturity curve where it's growing slower than an Office 5, for example, which is kind of catching up. Just because of the way the product life cycles are offset, it's catching up pretty fast actually, which is very interesting. So I think ShareGate could probably have a second growth engine, and that's what we're going for with like Teams and Office 365 management at large. But yeah, it's a managing that portfolio is pretty interesting. So there's a bunch of stuff that's happening in the lab. SoftArt is one example. There's a few more products that are going to come out of that next year or in the next 2 years. And then there's like existing products that are evolving in their own markets, and it's yeah, it's a cool challenge.
Yeah, it's funny you mentioned Office Vibe growing so quickly. I imagine the pandemic and people having to not be in an office, like probably helping quite a bit. Where it's like, hey, we need to measure if people are happy. It probably plays a pretty
Yeah,
big.
yeah. It's actually there's a positive impact on all our products. We were kind of in a position where very favorably placed. I think that the pandemic put a lot of pressure on employee experience in a distributed environment, and that's basically what our products do. And it's kind of the overarching theme of all our products, augmenting employee experience. Some people call it work tech. It's all the same thing. But yeah, I mean, it's funny because this pandemic provoked a change that was due in the market. It was due to happen for years, I think. And like anything related to human behavior, it's always the path of least resistance. And yeah, the pandemic forced a behavioral change that was, the technology was already there, and the market was already ready for it. It just forced the change, and now, yeah, there's this huge emphasis on employee experience and optimizing people's performance in a distributed environment, and that's kind of what we do. So it's pretty awesome.
One of the quotes I pulled. You mentioned, you guys help remove friction from using
Yeah,
technology tools to do your work, right? So it's like and then you mentioned employee experience, and like I think ShareGate and SoftStart fall into that. Maybe I find the one question around ShareGate seems less focused on employee experience as a tool. So like your thoughts. Maybe I'm wrong. Like feel free to say no, I'm completely off. Like maybe thoughts of spinning it off, maybe having it as a standalone
yeah.
business.
Yeah, it's a good question, and it's one that we looked at, obviously internally. And I don't have it, I don't have that material with me today. But if you look at where the product is heading in terms of the roadmap, and the roadmap of our portfolio that we want to build at Tsoft is going to be at least 5 to 6 products. ShareGate does have a very specific function in there, and the product itself will grow closer to, I want to say, the broader employee experience. Right now, it is affecting the employee experience, but sometimes it's indirect. It's not always direct. Versus an Office Vibe where pretty much everyone in the organization has a direct contact with the product. ShareGate does have, it's obviously interacting directly with any person that's managing in any way, like an Office 365 environment, but it's not every single employee. Although, when I say indirect, every employee does benefit from the simplicity that it brings to that environment. So that's today, and where we want to bring it is like democratizing kind of IT or sysadmin stuff to power users in an organization in a very complex, Office 365 environment. So we're going in that direction.
Yeah, it's fine. Yeah, interesting. One small point as a personal note, like since you've left PNR, I've been getting a lot of pressure to move to Teams. Like, and it's been like significant pressure for multiple people.
You
Like,
must be losing your mind.
dude, it's become very difficult. It's one of these things of like I'm gonna have to quit. Like, honestly, it's become like we have to switch to what Office 365. Oh my god.
It's funny because we actually see that behavior in our clients. When you hit the 30, 40, 50 employee mark, that's where usually, there are exceptions for sure, but generally speaking, people start shifting to 365. It's more complete, more complex. It just does more than the Google environment. I mean, a very small business appreciates the simplicity, and I get it of the whole G Suite environment. But up to a certain point, I mean, it is what it is. It's just more features, more complexity, and yeah.
Yeah, I think I'm going down with the ship on this one. It feels like I'm like on the Titanic here, but you you guys focus on like your core customers have always been, like you said, product led growth. So it's like you guys are not, you don't have salespeople traveling the world. It's all product led. SMBs now been market. Is there ambitions to start going upstream and building products that cater to larger and larger businesses? Because I imagine at some point you're going to tap out, right? There's not going to be enough room to grow for SMBs
Yeah.
and those kinds of business. So you'll need to go upstream. Or how do you see it?
So that what you just described is kind of true for ShareGate into the, how can I say this, the core value that it brings right now. So in terms of what ShareGate does today, if you exclude kind of the roadmap of where it's going in the next few years, yes, it has a pretty significant market share percentage. So yes, for that. But if you take a step back and look at everything that can be built in employee experience for like basically our target market is like 10 to 1,000 employees ish. It's a very, very, very wide market. Office Vibe has a very small percentage of its market share. It's a super active, landscape, competitive landscape. A lot of funding, a lot of acquisitions, and then we want to go more into that. So the total addressable market for employee experience in that segment, 10 to 1,000, is it's yes, like it's right. It's like massive. There's room to grow for a while. We're not going to hit the cap anytime soon. And to go back to your question specifically, no, like it's kind of in our DNA to target that size of business, and it's not it didn't just happen that way. It's the way we do things caters to that audience. It's very like bringing that 80-20 rule of functionality and complexity. 80% of the functionality, 20% of the complexity. That's how we do things, and that's what it caters to. That's the audience it caters to. So that said, we do have enterprise clients on almost all our products. We're not going to refuse a client that just wants to buy our product and implement it in a 40,000 employee environment. That is a thing that happens, and that's fine. We will not do the custom development for those clients.
Yeah. So like I was gonna say, you actually have to pick up the phone and talk to a person, like Martin has to talk to a customer. What? Like,
So this is odd because we are product led, but that said, every time I talk about our sales and our kind of like the CRO function at Gsoft, it's a pretty sizable team. It's probably something like 140 people. So like marketing, brand, sales, account management, customer success. So it's a it is product led, but there's still you still want to have that touch point and that close relationship with clients. So it's still a significant amount of people doing that in the day to day.
yeah, of course, of course. And yeah, do you foresee competition coming from like bigger players? I'm not sure if a Workday would be like in the right, let's say, competitive set, but I imagine software being so malleable, you'll start seeing competition from people that have the same idea. Hey, look at these Gsoft guys. What are they doing?
Yeah. Yeah, it's been we've been seeing again. ShareGate is kind of in a class of its own. It's kind of dominating the market in our segment for what it does today. So and there's another big player that's kind of a public company that does kind of what ShareGate does, but more enterprise. For soft start and office vibe, yes, it's happening quite a bit. It's a very, very aggressive market. A lot of very well funded companies. Although that's been slowing down in the last few months. So it's actually the whole financial markets situation has been kind of very favorable to us in the last few months. It's been kind of an unfair fight up to now. We've been having to be very, very creative with our resources to compete against really big players that were big by their funding, not necessarily by their success, right? And now that's being exposed because those companies that raised 50 or 75 or 100 million 6 months or a year ago, you can literally look at like their historical raises, and they're going to run out of money in 9 months. Like that's how it is. And you can start actually watching for like layoffs and hiring freeze, and they're all going to hit the wall because they're all losing money. So it's a very, very interesting time for us right now.
Yeah, yeah. It was actually one of my questions, and like I'm smiling because I'm thinking of that, that old joke of like, if we raise at the, $1 billion valuation, but I give you $1, if you remember that article.
There was a lot of that going on, I think, in the last few years.
The
It's
I don't think I told you this, man, but like someone, I forget who was in my network, and was like, a company like Gsoft sold a position because like A, you're private,
oh
B,
yeah,
you're not, there's not like like a bunch of VCs that are expecting greater and greater funding rounds with those
right,
expectations. Not that it's negative, but you guys don't have that, and then also you're very,
yeah.
very profitable, right? So it's like, hey, we could pay you actual like money, probably not in any kind of cryptocurrency, but here's the actual money that allows you guys to like go out and get talent, which I imagine in a down market is not a bad thing.
Oh, for sure, for sure. From a product perspective, like just the general growth of the business, and from a talent perspective, it's been quite the shift. In 6 months, and this is true for talent as well as investors. In not 6 months, in 6 weeks, the general market went from glorifying ridiculous growth numbers without ever talking about unit economics, EBITDA, profitability. None of that mattered, right? It was glorifying the growth. Period. There was nothing else that mattered. And now all of a sudden, and this was true for talent also, they just wanted stock options in those kind of overinflated, valuated companies, and play the same game as everyone else. And now the music stops, and all of a sudden we have people in interviews asking for, what's our runway? And we're like, unlimited runway. Like we have strong fundamentals, we're profitable, and people are like, it's almost like a freak company in SaaS right now. Like we're a high growth SaaS company that's profitable, and people are just like, okay, yes, like I want stability right now in my life. There's maybe a recession coming. The narrative, the discussion, like the employee employer discussion has dramatically changed in the last like 2 3 months.
So you've changed your Twitter profile from a bored ape. So you're not pushing your NFTs anymore, from what I understand.
I think this massive correction is going to do a lot of good. It's painful, like it's painful to live, but it's going to be a very necessary cleanup for a lot of things, I think.
I remember you're like thinking like talk markets maybe for a second, because I remember I was in the industry, like in 2008, working in the digital advertising side. I remember how it actually benefited a lot. I was
Yeah,
a digital agency, and like there was this huge shift from traditional media to digital media. So it ended up being a boon a lot to people, for smart people to move into tech. Do you have any
right.
like thoughts on what this current, let's say, market reset or Great Depression, depending on who you speak to, what's the consequence of this?
Yeah, it's a big question. I think it's very different though. I think it's closer. What we're living now is, it's not exactly the same, but it's closer to more of like the 2000 2001 crash than the 2008. 2008 was mostly driven by real estate and very complex financial markets that were just broken. And there was movies about this, and it was kind of the system was broken. What we're living now is there was just a ridiculous amount of capital that was injected in the system. And you look at like just the graphs of the Nasdaq or S&P 500 for the last 5 to 7 years, and it's fairly linear. There's ups and downs, and then the pandemic comes, and there's this massive explosion. Like the market did not start creating value like massively during this pandemic, right? That inflation was artificial. So to get back to your question, I think it's what we're living now is just we're coming back to what it should have been. It's just it's a bubble deflation. It's not a crash. A crash is when there's a collapse of fundamentals. Nothing makes sense anymore. If you look at kind of the 5 year average of the markets, we're kind of back on track to where we should have been if they hadn't printed obscene amounts of money. So yeah, I think it's kind of a cleanup, and then so that's the kind of macro top level, and then a level below that, again, you have these companies that were overfunded because there was too much capital. There was a bunch of bubbles and crypto. You mentioned NFTs. When there's too much capital, bad things happen. and that's what we've been living for the life. It's fun. It's fun. It's like a party. And then, like I said, the music stops, and then you have no chair to sit on. And it's like there's a lot of companies in that situation right now. So it's a necessary cleanup to a very specific context. That was a point in time in the economy, and I think it's overall it's painful, but good in the long run.
Well, considering the strength of your balance sheet, are you guys considering like an acquisition bonanza right now? I imagine there's a bunch of deals to be had, right? And like employee experience is so vast, and there could be so many ways to
Yeah.
jumpstart. Is that an option on the table?
Well, yes, without the bonanza. Like Gsoft has never done an acquisition, so it'd be a new thing. It is a consideration. We were always kind of kept an eye out for like a good opportunity, and we've had like very high level discussions in the past. Right now, like you said, it's a very favorable market for us. I mentioned before we have this kind of very complete portfolio of products that we want to build. That could be accelerated by acquisitions of a technology or a product, or an entire business. So yes, it's a bit more in focus. But then the challenge is that what we just talked about, of that all those artificial companies that made no sense, and that the business model was just broken from the start. There's a lot of those, and that now they're coming to knock at the doors of companies like us. Hey, we have 3 months of runway left. And they're trying to, like, they're shopping around for a buyer. But it doesn't mean that what they had was good in any way, right? Like the good companies, the one that made sense and the one that had some kind of road to profitability, those aren't the ones that are usually that come knocking at the door. So you'll have a more favorable valuation and conversation, I think, a more balanced conversation in this market. But it doesn't mean that it's like open season and all these acquisitions are going to fall out of the sky.
Yeah, so I imagine you're starting to think about building that function, right? Like a corp dev function internally to start like evaluating, like A and B, which one's better, and start not
Yeah,
just getting the inbound, but doing some outbound, like you said, because the good companies are not going to be shopping themselves around.
yeah, for sure. And we've actually started building that about a year ago, before the crash. We knew it was going to come, and for a company our size with our financial situation, it's something that makes sense to at least consider. Even like I said, even if it's a bit more outbound. So I think it's a good muscle to have, to be ready for an opportunity, if and when it presents itself. So we were already building that capability. We're going to keep building on it, and yeah, who knows? Who knows?
Yeah, yeah, it's interesting to watch you guys go. And what about maybe a longer term ambition? Like I know we've spoken about how Simon wants to stay private, and it's not been necessarily been, like people have been like VCs. Like I remember you told me when first week on the job, like you're getting cold called from like investors, like, hey, what's up? But
Yeah,
like you said, you don't really need the money, and you've been growing, and it's not necessarily a question of capital, but going public does
right.
give more opportunities, right? By being a public company, is that
Yeah.
something a consideration?
Um, it's, I mean, so right now the company is, and I've talked about this in town halls in the past. We're basically zero cash bound, meaning that any ambitions we have or things that we want to do is only restricted by people, our ideas, our ability to execute. We could hire 50 more people, 100 more people. We're actually hiring a lot right now. So as long as that's true, well, one, there's no real reason to have a conversation with an investment fund. It makes no sense. Like we could fund pretty much any kind of idea or initiative, and we're already doing it, with the lab now. So as long as that's true, we're not going to even think about that. But yeah, I mean, if ever we got to the point, and this is probably a few years down the line, but if we did, grow the portfolio and have really good success, and keep our strong fundamentals, um, and then we have an ambition of going after X market, and then we can't pay for that ourselves. We can't auto finance. It would have to be a pretty sizable acquisition, but yeah, I mean, I think other options would be on the table. We probably go through the same thought process as any company, like start with debt, and then go down the line from there. But we're so far from that right now. Like it's if if we just used cash on hand and debt today, we could probably do a fairly sizable acquisition. So it's we're focusing on kind of mid short term for now.
Is the reverse also true? Like when like an Atlassian calls and like they, we know the size of that kind of like market cap company. Like what is that conversation like, or is that something you're not even entertaining at the moment?
No, not really. There have been conversations that I've heard about before, even before I joined, and I think it's the kind of the vision is so specific that there's not like one player that would make sense. That's like a direct fit. Like Atlassian is kind of in the same space, but they're off like they're very kind of technical and focused on a certain thing. So we would see that as being restrictive to where we want to be. So like buyers and yeah, it'd be a fairly sizable acquisition. So you need a pretty big company to back that purchase. And there's just not that many players out there that would make sense. So it's just then it becomes like a numbers game. So it's very unlikely, I think. And we do like, and you touched on this before, we're in a very, very almost, I think, unique scenario of being like a high growth SaaS business that's profitable, that has like no external investors, no debt. So this flexibility and this liberty that it gives us, I think a lot of people appreciate that internally, and I don't think we want to lose that anytime soon.
Yeah, it's like a thing of culture. I was gonna say it's like until next time I see you and you have a Microsoft badge. You're like, hey.
Yeah, yeah, yeah. It's yeah, they're big. They're very big. But again, their focus is so they're shooting so wide now,
Mm,
and we're pretty close to them because of ShareGate, and so it's kind of in our we're not in our DNA, but we're a very kind of Microsoft focused shop, just in the tech we use and with some of our products. So I've been following Microsoft pretty closely in the last few years, and they're so big now that they have to shoot so wide. Like their total addressable market, it has to be like the world.
yeah.
So it's everyone, all the businesses, like they want it all, right? So it's very very far from where we are.
Yeah, but they're pretty acquisitive though. They do a bunch of tuck-ins also, right? They're not just buying,
Yeah,
like Salesforce or, this kind of mega deals. But it's funny you bring it up. It's kind of like the Berkshire Hathaway thing of like, they're so big, you have to make deals that move the needle, right? Kind of like the Apple deal that Berkshire
yeah,
did, where it's like, it's not, doesn't move the needle, if Microsoft buys like a
yeah.
small little companies, but at the same time, they seem pretty smart about it. But
They do smaller acquisitions, and they did one in our space. I think it was last year, maybe 2 years ago. I think it's Glint. Actually, it's LinkedIn that bought Glint, I think, which is one of Office Vibe competitors. So like they'll do smaller ones through a LinkedIn or one of their subsidiaries. But just like we're such a special beast, like if who would be that strategic buyer, that would make sense to buy the whole of us, and that fits with their portfolio. It's like it's just very unlikely.
yeah. What's been most rewarding for you, since you've taken over and like, you obviously, like have so much responsibility now, like, versus like back in the day running our shitty little business that we had together. So what's been the most fun?
Um, Well, the scale is fun. Like I was in bigger businesses before starting PNR, obviously, and I was in much bigger businesses than even Gsoft, and I think it's a good sweet spot where we're at. Like we're about 350 right now. It's like we're big enough to have some pretty solid ambitions. Awesome people, awesome team. I think, yeah, part of the answer to your question is the scale. The scale and capabilities is really fun to have. And one of the main reasons that I made the move is to get back into product. Like I'm very passionate about product, and I did most of my career in product, and yeah, so it's getting back to like understanding a market, customer needs, like what could blow their mind, and getting feedback from the market, and doing those iterative improvements, and hitting it big, or making a mistake. That's like a dynamic that I really really appreciate.
Yeah. Anything from our days together where like that helped you become a better manager, or how you think, how you approach a company today? Because you used to run product, you used to have like similar roles. Obviously
Yeah,
now like a higher level of responsibility. But curious as to what you learned along the way.
yeah, that's a good question. I think I learned like PNR was probably my most intense learning experience just by the nature of the work that we did, right? Like meeting companies and tackling problems, and it's just an incredible experience. The one thing, it's very macro, but the one thing that I appreciate the most, I think, other than all that knowledge that I learned from a bunch of businesses working with them, is living through the bootstrap entrepreneur life. And because right now, like in terms of governance, I report to the board, the three founders basically. And like obviously it's a much bigger scale than PNR, but I understand the reality of like every dollar needs to have an impact. And it's something that you learn when it's your business, it's your money. You're like every single dollar, right? Like, right? Like it has to be optimal for the outcome of the business, for your outcome, for your expectations as a shareholder. So that entire reality of expectations of shareholders and that whole governance mechanic of how to run the business, tolerance to risk, understanding their tolerance to risk, positioning the business in relationship to that, all that. Once you have lived it as a founder, especially with your own money, I think it's just invaluable context and experience.
Yeah, like you said, I think it allows you to be a better manager, but also now that you work with shareholders and the guys that started the business, you have a certain level of empathy towards each other, right? Where you can
Exactly.
have that,
Yeah.
like that conversation on the same level where you understand
Yep.
exactly what it is, even though let's say Peter is just a bit smaller. Um, on the like, I'd love to pick your brain, maybe not on Gsoft, but just on general interest, right? Because I think one thing I miss about working with you is just picking your brain about so many different topics we would talk about. What's on your reading list? What's the thing that you talked about? Last time we geeked out on crypto, the pre crash. What's interesting to you right now?
Um, very much, like a lot of people, I think, kind of macroeconomics. What's going on with this? What we were talking about before, basically, like this bubble correction. It's. I find it fascinating. It's almost more entertainment. Almost, it's like seeing when you have these extreme circumstances, you see the same people that were like promoting these ideas and businesses and markets 3 months ago, saying today, "Oh, we told you so." Like this was crazy, this was ridiculous, and now they're driving the market down because all the funds and all the big money, when there's a correction like this, they want to drive it down as much as possible. So it's like the narrative completely flipped, and just taking a big step back and looking at that dynamic, I find absolutely fascinating because it's such a big contrast in a short amount of time that it exposed this kind of role reversal for smart money basically. So that takes a lot of my time trying to like read kind of where it's going. Obviously, a lot of tech companies have announced hiring freezes and hiring reductions and cuts. We're definitely not there. We're still hiring, but you want to be at the forefront of anything that happens. We're not. I'm not certainly not excluding of like a very severe recession. I think things could go off the rails. The mistakes were made. Like some pretty serious mistakes were made in the, like macro economic side of things. And yeah, I think I most likely it won't go there, but if it does, you want to be ahead of that curve and be ready for it. Again, we're a very special beast in terms of we don't have a set runway. We're profitable. We have strong fundamentals. I can't imagine a scenario, this cataclysmic scenario where we have to like stop the growth of the business. It's almost like unthinkable. Nothing's impossible, but it's very very unlikely. But you want to keep an eye out for that. So I'm very very outward facing in terms of analyzing where things are going, and there's definitely an entertainment side of things, and then there's like a more I need to kind of have a very good idea of what's going on at least in the next 3 to 6 months.
Yeah, well,
So
yeah,
it's yeah.
we'll have to like which trade ideas is like what was the market top, right? Like which like stupid idea that got funded, or like some like some trend that ended up exploding. What signal the
that
top?
that would be a long conversation. Like the amount of businesses that make no sense at all. That went public. Like some of these went public, and they're still listed today. And I don't want to name any names, but there's some local companies that they were it, even like financial analysts in very reputed newspapers were like propping these companies up like they're the next Quebec Inc. And they didn't know how to make a dollar profit, and they still don't know, and they never will most likely. And now they're public on the markets being destroyed, and they're kind of screwed right now because they can't raise, they can't sell shares, no one's going to invest at that valuation. And I think, yeah, there's going to be some casualties.
Yeah, yeah, we will not name names. But I want, like, on the same topic of trends, like you seem very protective of Gsoft's culture, and like rightfully so, as you should be. Um, the topic of remote work is one that's been, like obviously top of mind for everyone. Be curious to hear your thoughts because it's one I've been wrestling with. Obviously, we're small, we're sub 10 people. Like, we're just around that mark today. You guys are 350. You're very well, I want to say, renowned for having like this incredible office. How do you manage this, and then how do you see that changing also in the future, right? Because it's not a very
Yeah,
static thing.
no, for sure, for sure. And it's something that I'm pretty proud of how we tackled that. And it actually started before I started. So Gsoft took the stance of shutting the office down before the government asked for it. Like there was so many unknowns that the executive team that I was working with as a consultant back then made the call of shutting it down. So everyone remote, and obviously we're a tech company. It's easier for us to make that transition than Passport Canada. So it like it happened fairly smoothly in terms of short-term productivity, was maintained, and people understood, and I think a lot of people appreciated. And very quickly, and this is around the time that I came in, we put in place these principles of communication collaboration in a distributed environment. We did a whole lot of research of what successful distributed companies did to optimize, culture and productivity in that kind of environment. We put those in place, and then from that point on, it's just tweaking and adapting, and basically the outcome is this super flexible work environment where people can work from anywhere in the world for 6 months a year, and they go in the office when they want. They can go in every day if they want. The office is awesome, and extroverts can go in the office every single day of the week, and some people can never go in the office. But we have these principles that hold things together. So it's different. It's not the same for sure. Like I lived both realities of Gsoft, 100%, in the office every day, and today. It's for sure the culture has evolved quite a bit, but I think we're managing it. From what I hear in the market, I think we're managing it, very very well.
Yeah, better than most, right? Like giving that flexibility. What's your take on companies that are like, like Musk, like no, 100%, you have to come to the office, and like then you have the opposite of like companies that are like a Shopify, no, 100% remote. We're not,
Yeah,
like don't even work here if there's an office. Like, what do you think
yeah.
of those extremes?
I think that you know that everyone has a reason, right? Like people aren't. Everyone has their own reason. It's controversial, like in the case of Tesla, because it's Musk and he's very popular, and he's very vocal about things, and how he does things is very kind of brutal and direct. But I mean, the reality is it's a car manufacturer with factories, and there's I don't know how many, like 100,000 employees or something like that. Like it's a massive company. We forget about that because it's Tesla and it's like considered a tech company, but it's a massive manufacturing company. So I understand why you would want a lot of those people to be on site. There are reasons for that. And then do you start managing who can, who can't? So basically, for most likely for the sake of productivity, you just like blanket rule everyone back, and we'll manage exceptions. And so it's like there is a reality where that makes sense. And then a Shopify, which is much closer to us in terms of the products and philosophy and tech, and like they're at the other end of the spectrum. So it's even further than us. Like we meet in the office 3 times a year. Like everyone, we'll fly in people from everywhere, and we'll have like this big, these big events. We're talking about products in the market, where we're going, strategic planning. So we're kind of in between. So other than those 3 events, people can come, when they want, and they can work from everywhere in the world. So yeah, again, every company does what they need to be as productive, and to attract the right talent. And The only exception to what I just said is, and I think there's still a lot of that going on, is asking people to come in because your management layers are bad, basically. So you can't manage performance and someone's output without having them sit in front of you and looking at what they do while they type on the keyboard. That's just a symptom of something else. Like there's no trust, and your managers are probably bad at what they do, and it's like a last resort. I need to keep producing, so everyone back in the office, so I can check on their 9 to 5 and what they're outputting and making sure they're not going for 2 hour walks. That's again, it's a very bad reflex to a symptom of another problem, and but there's a lot of that going on still.
Yeah, I was gonna say it's like with a lot of the like issues we're having in terms of servers. You mentioned Passport Canada, but there's so many different like public and private organizations that are struggling with this return. It's not just
Well,
the
I think
lack
it
of
was
people. Like you said, it's
yesterday, right?
yeah.
There was an article in La Presse about this scandal of Hydro-Quebec with automatic mouse movers. Like, I mean, I don't even know where to start. Like, how broken does your management structure have to be to have a problem like that? That means, like, what they don't talk about in the article is, in practice, from a management perspective, if that was even possible, that means like the output of employees is basically not measured, like or not measurable, or you're massively overstaffed, or again, there's all these other symptoms that create this environment where people can install a mouse mover and go on vacation for 3 days. Like it's almost funny how bad it is. But again, it comes back to management maturity and effectiveness.
Yeah, I read that article you mentioned, and like I started shopping for this mouse tracking software. It's like a team has to be productive. Yeah,
It's
it
so
was a
bad.
bit sad. Yeah, but anyways, man,
Yeah.
following you guys has been really incredible. Obviously, it seems like you have really the wind in your sails in terms of where you're going. So it's like the best days are far ahead. And it goes back to this, this notion of the power law of like these outlier winners, and it's cool to see in this market like such a huge outlier winner, and one that obviously doesn't we spoke about the office and remote work, but you guys are truly global companies. So I hope you guys
Yeah.
don't decide to move the head office because I think it's going to benefit the local economy quite a bit.
Yeah, and it's something that I tell to a lot. I tell this to as many people as possible to make myself accountable or make ourselves accountable. Is there's no reason why like we're not one of the biggest tech success stories in Canada in the next 5 to 10 years. So every the stars have aligned. It's all about execution. We have the resources, the capabilities, the people, the products, the product strategy. Like everything is there. If we fail, it's on us. So I'm passing that message to as many people as possible because I want that pressure. But that's the reality. That's what it is.
Yeah, yeah, I think there's no better way to end this, man. So, Martin, best way to reach you guys, learn about Gsoft, apply, connect with you.
Yeah, we have like a whole bunch of positions open, and we're still hiring. And website is probably the best guess. LinkedIn or website. And yeah, we have a very active recruitment team and products team. So yeah, website is best guess.
It's been fun to catch up, man. I appreciate it.
All right, my pleasure.